Joining me now, BlackRock U.S. Head of Equity ETFs, Jay Jacobs. First to the markets at, well, let's call it 10,000 feet. What a week here. And does anything surprise you about the market's behavior? The Dow is not holding up at the moment, but the rest are showing some resilience.
I think we're seeing a lot of resilience. We've seen pretty strong earnings coming out of the market this week. There continues to be a lot of investment across a variety of different strategies and asset classes. So right now, sentiment appears to be pretty strong, and people remain bullish on equities and broader commodities as well.
The earnings picture, let's not forget it, it is really going to come into play next week. Apple, Meta. We've got Tesla reporting, Microsoft reporting. Microsoft is really jumping today. But these names, how could they change sort of the narrative that has been very Davos, Switzerland focused from the World Economic Forum?
Well, there was a huge focus at Davos on artificial intelligence. Maybe no surprise. It continues to be the theme of perhaps the decade, if not the century. It's really going to come down to that for a lot of these companies. You look at the Mag 7, you look at a lot of these mega cap tech names, they are so tied to the growth of artificial intelligence. But if you look at last year, token usage, which is really the unit of account of how much computing power is being used for artificial intelligence, almost 20x last year. So AI is growing tremendously fast. We have a lot of conviction that this theme is going to continue to grow on a fast trajectory.
Is it enough anymore for our viewer investors, who many of whom have gotten a lot more sophisticated over the past couple of years, hopefully because you're watching us, but that said, is it enough anymore just to buy a basket of sort of the skimmed cream off the top, the biggest names in a certain thematic area, whether it is nuclear or AI or chips? Is it more important now to have a little bit more if you're buying an ETF?
I think that's right. So we really look at the opportunities in three buckets. One is, what are your growers in your portfolio? This could be artificial intelligence. It could be electricity and power infrastructure that's applying artificial intelligence. Those are the growers. But increasingly, we're getting a lot of questions from clients around where they're going to generate income, especially in this year where we might see more Fed rate cuts and income becomes maybe a little harder to find from traditional sources. And then finally, the third bucket is diversification. What can behave differently from stocks and bonds? Things like gold, Bitcoin, alternatives, other ways to get invested that are not going to have such high correlations to the market.
And to do that, you've got some ETFs that aren't just baskets of names. In fact, what they do is they have sort of option overlays where it's a lot more sophisticated, isn't it? And one of them is BALI, B-A-L-I. This is really focused on income-oriented. Well, we're all income-oriented. Who isn't at this point? But it writes the calls, the index options, et cetera, so that it, mitigates any major fluctuations.
That's right. So this is a very common strategy that people try to implement themselves. They'll buy U.S. equities and then write call options on top of it to generate additional income. Imagine all of that being wrapped into one ETF. So the focus of this strategy, BALI, which I know sounds nice in the middle of a snowstorm, that would BALI and a little bit of sun, it's wrapping that together. You can get some growth exposure from those U.S. equities in the portfolio, and you can get some additional income from writing those covered calls all in one sunny ETF.
And yet you've got another one, BAI, B-A-I. This is the largest AI ETF. It's actively managed. It has a more precise AI theme when it comes to exposure, not, again, just a bunch of the usual suspects. My question is, when we started to look at the most widely held names in these, there was a repeat here, and that was NVIDIA. Now, yes, we do have the NVIDIA headlines today that China is basically, and this is a report from Bloomberg, saying that they will be able to allow names of companies in China like Tencent, Alibaba. Anybody who needs to buy these chips, they can buy the NVIDIA H200 approved chips. But as sort of a precondition, they have to buy China-made chips first. But that said, aren't we, if we buy both of these funds, aren't we kind of doubling up on NVIDIA?
Well, interestingly, what we did recently was surveyed advisors and asked them, what are you looking for as a theme in 2026? And the majority of advisors said they're looking to diversify within the AI theme. People still have a lot of conviction for the AI theme, but they want to own some other parts of the value chain that could see some strong returns this year. I think that actually points less to the mega cap names and to some areas like some of the smaller semiconductor stocks in the memory space, in the CPU space that could do quite well. We look at data companies that own a lot of proprietary data. So in a fund like BAI, yes, it has exposure to mega cap tech, but it's also really looking at kind of that next tranche of AI names that remain a little bit bit under the radar for how important this theme is.
One last thing. We cannot ignore what is happening right now in the metals markets. Gold surpassing $4,900 a troy ounce. Silver, did you guys see silver? Above $100 for the very first time ever. There are industrial metal uses for a lot of tech. I mean, how does BlackRock stand when it comes to, well, heck, let's just go into silver and silver miners?
Well, silver's in a really kind of nice area, right? Because there's the precious metals story, which is all about diversification and maybe a hedge against further inflation or geopolitical instability. But then you have this really strong industrial story of growing manufacturing, growing electricity. Silver really sits on both sides of that fence.
Jay Jacobs of BlackRock.